How does drive copper forecast the global commodity economy? Imagine a metal that acts like a health check for the entire world. That's what copper does in the market. Its price movements often tell us how well or how weak the global economy is doing. Copper is used everywhere from wiring in homes to parts in cars and machinery. When demand for copper goes up, it usually means factories are working hard, building new infrastructure, and economies are growing. When demand drops, it can signal that economic activity is slowing down or even heading toward a recession. Copper prices are like a thermometer for the economy. If prices rise steadily, it suggests that industries are thriving and demand is high. This means more construction, more manufacturing, and more investments. If prices fall, it can mean that factories are producing less, or that consumers and businesses are holding back on spending. These shifts in copper prices happen because copper is a fundamental part of many sectors that drive economic growth. One reason copper is such a good indicator is how widely it is used. About 60% of copper goes into electrical wiring, which is needed for homes, offices, and power grids. The rest is used in building structures, making machinery, and creating transportation vehicles. Because of this, copper demand reacts quickly to changes in industrial activity around the world. Another way copper forecasts the economy is through its relationship with economic indicators. For example, the Purchasing Managers' Index, which measures manufacturing activity, often moves in tandem with copper prices. When manufacturing expands, copper prices tend to rise. When it contracts, copper prices usually fall. Stock market indexes like the Standard & Poor's 500 also show similar patterns, reflecting investor confidence and economic health. Inventory levels are also key. When copper stocks are high, prices tend to drop because there's more supply than demand. When inventories are low, prices go up, signaling tight supply and strong demand. Traders watch these inventory reports closely to gauge whether the market expects growth or slowdown. Market sentiment is another piece of the puzzle. Traders buy and sell copper futures based on their outlook for the economy. If many are betting on higher prices, it shows optimism. If they are selling off futures, it suggests worries about economic weakness. Looking at history, copper prices often lead the way. Changes in copper prices have preceded shifts in broader commodity prices and economic turning points. For example, a sustained rise in copper prices can signal upcoming economic expansion, while a decline might warn of a slowdown. For investors, keeping an eye on copper prices can offer clues about where the global economy might be headed. Rising prices suggest good times ahead for industries and commodities, while falling prices may mean caution is needed. But it's also important to consider other factors like mining output, political issues, and inventory data, which can influence prices independently of the economy. In the end, copper acts like a real-time barometer. Its price movements reflected the health of industries and the overall economic environment. That's why many see it as a useful tool for predicting the future of the global commodity market and economic trends.